Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert. The Dividend Diplomats. This is a simple question, everybody. Is it time to buy this Dividend King that dropped over 20% this week after it missed earnings badly?
Ooh, guys, hit that subscribe button. Give us a nice thumbs up. The Dividend Diplomats are back talking about a Dividend King
Mhm.
that is crushed over 20% this week.
Yeah, and on a side note, everybody, thank you for putting up with me over the last week while I was working through some audio issues on my computer. I hope it's been remediated. Hopefully it doesn't sound like I'm muffled. Please let me know in the comment section below. Lanny checked it before and said it sounded a lot better, so we're rolling with it. So please let me know down there how the sound is coming through today.
All right, Bird, let's talk about Tesla. No, let's talk about Bitcoin. No,
No,
no, no,
Nvidia.
no. NVIDIA. No,
Well,
no.
Target, ticker symbol
G,
TGT. We're just
G.
gonna rip the band-aid off right now because man, did this dividend king come tumbling. On the heels of earnings release, it was interesting this week. Walmart, the day before Target announced earnings, Walmart crushed it. Consumers were shifting over, they were firing all cylinders. Unfortunately, they must have taken away from Target because Target had some major issues in that earnings release, Lanny.
They had some issues, huh, Bird?
Yeah, that revenue missed expectations by a significant amount, even though it was up 1% over a year. EPS missed expectations by 45 cents. It was $1.85, so it missed what, $2.30 was where it was expecting. But what happened though? I think that was it. There was some margin decrease. The interesting piece was last quarter, Target was firing on all cylinders. They actually had a really strong earnings release in Q2. You saw a lot of the tailwinds that were boosting the stock up. Management was all excited. They're like, we're going to cut prices. We're going to keep sparking up demand. We're going to keep getting people in the door, buying our stuff. We're launching a revamped, low cost products for so many people that fell flat on its face. They could not jolt sales. And that's really what happened. And Lanny, not only were the earnings bad, what happened to the guidance thereafter?
Well, sometimes when earning gets bad, it's hard to say, oh, yeah, we're going to be better going forward. No, 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 not here. They actually said, yeah, this could be for what is to come. Now, most management teams also do, when they do better, they like to say, okay, we're going to keep doing better. When they do worse, it's like, well, let's under promise and maybe over deliver during the holiday season. So that's kind of what Target, I feel like, is doing is they dropped guidance. They're saying that, going forward, that the guidance is going to go down to $1.85 to 245 versus what they were initially expecting of 264
It's a
and
terrible quarter.
reducing guidance quite a bit.
Yeah,
So
and their full year guidance to add to it, Lanny, it was at 952. They're dropping the range to 830 to 890. So double beat down there. And they will put the quote up there from management as it was going through. They said it's disappointing that a deceleration in discretionary demand combined with multiple cost pressures have caused us to take down our guidance after raising it last quarter. So that's why Wall Street punished them. Last quarter, guidance went up. This quarter, it came back down. So that's really the story of what happened with Target. It was just a bad quarter, and things aren't looking great in the short term.
nope, you're right, Bert. But they are a dividend king, guys. They have been through many financial economic time periods. They've dealt with the Amazons, they've dealt with Walmart before. I didn't see too much about theft in the release. I don't know if you saw anything regarding.
No theft. I saw more. I think it was they were impacted. They claimed they were impacted by the port strikes that happened, but then there was also contradicting stories that would show they just rerouted stuff to different ports and they were getting ahead of it. So seems like a lot of noise and a lot of excuses, but theft has been fixed. And if you've gone shopping in a Target, you can tell that it's been fixed because there's a lot
Yeah,
more
the
behind locked
self-checkout
gates.
lanes are,
Yeah,
yeah.
it's intense in there, but unfortunately,
I was just there, and I'll tell you what. The one thing is we have a two-story Target, and our escalator was down. So man, had to ride the elevator to get up to that second floor was kind of interesting. But they're kind of soup Nazis out there on the self checkout line now, right?
Yeah. Oh, yeah. They're all over you. The cameras are there. They have people policing them. But I mean, you can't blame them. Theft was such a big issue for retail. It's unfortunate it comes to that level, but people put you in that situation. Throw throw the baby out with the bathwater. So people like us, Lanny, that aren't trying to steal stuff are now
Yeah.
hindered because people just wanted to stuff their pockets with a bunch of expensive stuff and sell it on the
Am I
secondary
still
market.
shopping at Target? Yeah, you
Yeah,
betcha. I mean,
you're
if you had
darn
those
right.
there, yeah, Bird's shopping there. Bird's got the red card. We got the red card in our family. I own over 100 shares of Target. Bird owns, I'm pretty sure, well over 100 shares of Target.
That's right.
Um,
Oh, yeah, this wasn't a fun week for us. It was down 20%. We saw the market value pop, but again, we're long-term investors, so let's see how Target's going to perform through our
yeah,
stock screener
let's see
after
that
cutting
swing
the
in.
guidance. So we'll
Let's
pull it up
freaking do
here.
it.
That price to earnings ratio, Lanny, price is now a dollar. What is it, a dollar? $121.59. We would have a big problem if it was a dollar or something. Earnings per share is $8.60. That's the midpoint of their new EPS range that they produced of 830 to 890. So we picked 860. PE ratio of 14.14.
Hey, not terrible. I mean, over
No,
14. Okay, okay. Now,
no.
now given, so Bert's using the midpoint of the guidance, they pay a $4.48 annual dividend spread over those four lovely quarters. Dividend payout ratio is still only 52% for Target, guys. So that's still a relatively safe payout ratio. Again, even if they drop down to, let's call it like, let's take out $6. Let's take out $2.15. Let's go to 6.45. You're still with a 70% payout ratio, even if another 25% in earnings drops. So
Yeah.
pretty safe.
Yeah, and their 5-year dividend growth rate's 11%. They're Dividend King, as we mentioned. However, we got to throw the disclaimer out there. Doubt that dividend growth is going to be anywhere close to 11% right now as they're working through some of these headwinds.
Yeah, just to do a discount double check on Target's last dividend increase. Their last one was a whole 2 cents from $1.10. So as Bert indicated, a very, embarrassing 2% dividend growth. And we would expect kind of some more of that here in the near short term.
Yeah, so their yield has now popped up to 3.68% after the massive fall, which is 1.42% above its 5-year yield of 2.26. So you're catching Target at those close to 5-year highs for dividend yield.
4%, 4%. No,
Right?
so yeah,
Wow.
so yeah, down 21% in the last 5 days, down 15% in the last, I guess 11 months, since the beginning of the year, down since last year, down over the last 5 years. And, correct me if I'm wrong, is this only a 56 billion market
Yeah.
cap stock now?
Yeah, well, when it drops 20% in 5 days, the market cap's going to keep tumbling down.
That's incredible, guys. All right, so here we're at. I've got 135 shares, of Target, give or take. If I look at my position, last time I bought them was probably right around this, it was around the
Yeah,
120s. So my eyes are definitely wide open right now.
they are, especially as the quest for finding undervalued dividend stocks becomes more and more difficult. It's worth at least keeping an eye on Target, seeing what's happening. That payout ratio is solid at least. So if you're going to see drops in earnings, at least you have the payout ratio. You're not seeing a payout ratio of 80 or 90%, which would change this answer dramatically.
No, 100%.
Yeah. So everyone, let us know what you think of Target. What are you thinking of Big Red TGT? Are you buying this stock or are you avoiding it altogether? Let us know in that comment section below.
Guys, smash that subscribe button. Give us a thumbs up. Not only are we curious about what you think about Target stock, but what other stocks are you buying right now? What investments are you putting your dollars in right now? Again, the S&P 500 is up 25% through November 21st. So let us know what you guys are doing to get to financial freedom, to create that passive income source, to get to being financially independent, guys.
And remember, you're either with us or you're against us, Jack.
Guys, that was Bert the Hart and Lanny from the Dividend Gosh Damn Diplomats. Over and out.